Okay, guys, we are back at it, and we are about to talk about using volume to spot the next incoming bull run and how to use it on your specific goal and role, whether you are a long term investor, a swing trader, or a day trader. This is within a series of educational long form videos I have been making you guys, showing you how to go from the basics into more advanced techniques, and we will get deeper and deeper video per video. And I'm Billy Banks. Make sure that you get subscribed to the channel so you don't miss out on any updates, any analyses, any early seats, and get to the Discord so you can get all the alerts in time. Let's get right into it now. We'll go through a few different examples from the top gainers through the most actives and the 52-week lows, and I'll show you a few different types of sets to be looking into because the long-term investors, swing traders, and day traders all look for different types of sets of volume to match up with different types of key statistics. And this does come down to, first off, understanding your goal and your role. And me myself, understand that I am a swing trader. I do day trade. I'm not really going for much for the long-term investment. And again, if you are newer to trading, then you want to begin swing trading so you can take it slow and digest all of that information. Let's get right into it with SMX being the top of the most active list, being the highest in volume. Being such a high volume stock, this will be active for the day traders. Day traders love a high volume stock. Once that thing picks up in a certain amount of volume, once it gets over those millions, it starts to really get big in volatility. Once that thing gets volatile, it makes day traders more confident to be able to get those quick bounces and lock in gains. And traders in general, especially day traders, plan to lock in gains the same day. They'll go in off of their 1 minute charts for quick dips and quick rips all throughout the day. So we'll be watching our volume continue to pick up. You'll be looking at your average volume is what the think of your average volume as how many traders are coming into that stock on average per day. On average, it's 23 million in SMX. And in the last trading day, there's 448 million coming in. Once that volume gets over that average volume, that's a key moment for a stock where day traders love to make it come in for that next big wave. You're always watching for your volume to begin to outdo that average volume, and you want to see it fill up your float, but we'll talk more about the float here in just 1 second. Again, a high volume stock will be active for those day traders. It will mess up a long term investment if it gets too high in volume because day traders are going to sell that thing off and ruin the bullish sentiment. If you are looking for slower and safer things, you want to be going off of your 50 when you're going for your 52-week lows or whatever stock you're going for in general because you're getting it off a bottom and off of that discount. And if you're seeing our previous videos, you will understand what the difference is between getting those stocks at the top or at the bottom for your specific chart trading strategies or whatever. And when you are getting to your next stock, you'll be able to see if it's a low stat stock and or a low volume stock. If it's a low volume stock, how we can see this one is ABP, a low volume stock isn't gonna have all the fast active day traders in there. It's only really going to be getting noticed by the long-term investors and the swing traders. When those long-term investors and swing traders start to buy in that thing and get confident, then you'll start to see rounds of bullishness begin to come into a stock down from the bottom. If that stock remains to be a low stat stock while it's starting to pick up, it'll come in for a clean reversal. For example, here you can see ARBK with an average volume of 995,000. Still a low stat stock, still right under 1 million, and has a value of 2.50 million. Starting to pick up and make the next round of bullish divergence. If you don't know about the RSI and the MACD, check out my previous videos I just made yesterday, letting you know when to buy and when to sell, and how to master using the RSI and MACD, using these professional strategies to time your buys and your sells. If you integrate how to use your RSI and MACD for incoming reversals and match that up with your volume starting to pick up over that average volume, once that volume starts to get noticed by the rest of the day traders and longer swing traders, it'll start to gear up day by day. as your stock goes from oversold back up to overbought. That's where that stock will start to meet up with that free float. And in this case here on ARBK, you got a free float of 63 million. It's going to start to get that volume to meet up with that free float. Once it can meet up with that free float, this thing will come in for that explosion, adding into that bullish pressure a whole lot faster. And people are going to load and hold this one up until it starts to get so volatile where all the day traders are starting to get in there. Now, if we zoom in here on your 15-minute chart, in your 1 minute chart, you'll be able to see how some people were actually looking to sell this stock off in that day. And notice that once all that selling pressure in between really started to come in, is when that volume will get over that million. Because that's when day traders want to partake. But still holding up and climbing up, this is making ARBK a very clean stock for another round of the bullish divergence. And this is just the beginning, as this one here is going to go back up to overbought. And once this thing picks up in volume, it might even make its way up to the most active list if it gets high enough in volume. Because as you can see down here, a stock only needs about 100 million in volume to really pick up into the most active list. And if every stock gets its day on the most active list, and that comes from the 52-week lows, and then that thing is going to explode and turn into the top gainers. I'll go show you the volume now from starting off on the 52-week lows, where it's low volume, picking up into the most active, where it gets high volume, where all the day traders are getting in there, and then going to the top gainers after it explodes. And you'll be able to see how the volume, once that thing explodes for the last, go back to your weekly charts, the last few months or a few weeks straight, whatever, once it gets to the top, and all the day traders are done with it, and it gets too high for small retail to buy. For example, here on XCUR, up here at $25, this thing has a volume of 125,000. Day traders are done with this stock. And now long swing traders and or long-term investors, lifetime investors are the ones that are still holding this thing up. And you'll be able to see quick dips coming in because swing traders, long swing traders will lock in gains off of that next round of the bearish divergence. And then once it goes back down to oversold, coming in for another round of bullish divergence, but stopping around $13 is still too high for small retails and the day traders and whatnot to be getting into. So this comes down to higher price stocks will be smaller in the volume when will be safer for longer term investors and our bigger swing traders to be going for because they don't really got to worry about all the quick fast day traders be partaking up in there. And then the quick fast day traders like to wake back up and get back to the most active list because they didn't notice that thing down at the bottom of those 52-week lows like we did. And then they got to wait until it picks up on the most active list to get in. How you can see LICN up here with a volume of 186 million. Now, since you have active day traders getting in, you can see in the last trading day, they went from 19 cents up to 77 cents. Active day traders want to sell this thing off. Very active in the last trading day. Swing traders and long-term investors are still buying this back up. This stock may not remain so active in the next trading day because on average it only has a volume of 3.84 million. Still a decent average value to be getting. So in a case like this, we'll be looking for a lot more volatility to still be coming in the next day as it holds up and looking for a spike to come in until this thing becomes overbought and it'll be becoming overbought over that dollar, massively overbought at that $2. And you have your target ranges. If you seen my last video I put out yesterday on how to read candlesticks, I was showing you how. Yeah, y'all know how I go. Same thing, the bullish divergence and how to follow along with your candlestick patterns to get a profit target 1, 2, 3, 4, and 5 all the way. Check that out. Sat there and showed you how to ride that flow. It's very easy, okay? And watch out for those people when they making videos showing y'all how to read these candlesticks and stuff like that off of a still chart. Let me tell you something. You can read something that's not there. Yeah, it's easy to go back and read on the past on that thing and say, yeah, this happened, that happened. You need to read this, that, and that there. But notice that if all this information wasn't there before, then we wouldn't have been able to see that coming in. This is where your indicators come in. And I proved that here in the last video on how to read candlesticks for starters. Watch out for those people telling you that that you can read these charts and whatnot, that they can do this off of still charts. Because where the real skill comes in is going to a live chart, like over on BTC right now, that's live. And you can spot out the income reversal on BTC, and we can sit here and watch every income reversal for a profit one, profit two, profit three, profit four, all the way even along. But this is not how to read candlestick video. And go check out that last one if you want to see how that trend works. Here, make sure that you remember you want to see your volume meet up with your average value. If you have low volume and or low stacks, it's going to be easier for the longer swing trader. If that volume starts to pick up, like here on RIME, for example, 73 million in volume, outdoing an average volume of 5.52 million and a free float of 11 million. It's outdoing that float, outdoing that average volume, and picking up to such a heights that active day traders are starting to get up in there, as you can see from the last trading day versus when nobody was really noticing this thing. Now we're going to start to have longer swing traders get in, and they're going to face big resistance around that 17 cents, where it's going to get closer up to overbought. You follow along with the flow. And welcome anybody joining in on the Banking with Billy Classroom. Currently doing a educational video on how to revalue versus the free float, the spot income reversals, and how to use that for different specific goals. And so just to recap this, remember if you are the longer term swing trader or looking for the longer term investment, it's easier to stay up in that trend if you have lower stats because you can see a cleaner bull run and don't got to worry about all the day traders that are going to sell that thing off when we want a sentiment. Remember, if you are the day trader, you want to be looking for day traders like to look for the high volume stat. You want to be seeing your average value. You want to see your volume outdo your average volume and fill up that float. And remember, once those things get up to those top gainers that have been exploding for months and months, now it's at those prices that are so high where active day traders and the small retails and whatnot can't really partake in those. So we're going to watch that volume start to get low. For example, on XQ that has a volume now of 125,000. That's been exploding for weeks now. Where bigger players will feel more confident in there for easier runs because a small retail won't be able to mess up the trends for them. And you can follow along with these different flows and make sure that you remember your goals and your rows, then you'll be able to catch those waves every single time. And we'll dive deeper into the next one here in a bit. I'm Billy Banks. I'll sell the next one there. Happy trade.